Good evening, traders. Adam here with Bold Logic doing our normal market analysis with you. Tough day out there in the markets today. Very choppy action. We were red pretty much all day, but it wasn't easy as we faded and then bounced and then faded and bounced and kind of rose into the close a little bit. Nothing really major happened as far as the market movement. It was very tight range, very low volume action. One thing on the constructive front is we did see a hold of this 20-day moving average and a hold of this past breakout area. We did not fade into there. Buyers did step in at the 20-day moving average to keep us propped up. On the downside, we still haven't seen anything happen out of the bulls. We haven't seen it for a month or so ever since we broke out to these levels. We had a nice little bull flag coming in, and we just faded down. Nothing happened with the bulls. We hit these support lines, hit the 20-day moving average. Again, nothing really happened to the bulls. We had a nice bounce, or what they call a dead cat bounce, and then we kind of ran up, and we finally broke out 3 days ago, except we didn't get any continuation run. Friday we had a nice little doji candle, and today, as expected, we were actually down. So nothing really happening here with the bulls. They're just kind of muddling around in this area. Definitely need to see them kind of step up in certain places just to be able to make sure they still have their feet on the ground, and we're going to continue to push forward. Otherwise, the selling is just going to continue to kick in. Sooner or later, there's going to be a lack of buyers, and we will find ourselves moving down to the lows. Again, we all like to watch this support of this 1420 area. That is our main support. We also have these secondary supports in the 1430 and the 1440. We also have the rising moving averages, and we are still inside of our nice uptrend that we have formed throughout June into the end of the year. So definitely very constructive in a bullish standpoint, but we are stuck here in the middle of this uptrend. So we're pretty much stuck in no man's land. Do we buy here and look for to push that to the highs, or do we sell here and look to break or at least tap off these lows and get a bounce? So being stuck in no man's land kind of has us choppy right now. We don't have too many economic reports coming out this week. Very few. I think a couple on Friday, the Fed Beige Book on Wednesday. More importantly, though, is we have earnings season starting tomorrow with Alcoa reporting after the close. So we'll have to see how they do. They should offer at least a little bit of idea of what's going to happen with the market and what investors are thinking. NASDAQ was down a little bit more than the S&P, as you can imagine, with Apple coming down over 2%, broke through that 50-day moving average, broke through that head and shoulders pattern that we were alluding to, and is now finding itself a lot lower. One thing about Apple is it does have a lot of volatility going to it. This is the VIX for the Apple stock, is now at a real big high here in the 40s. This area right here where we tapped, let's see, 37, 38, that was last earnings, just to give you an idea of how high volatility is. The earnings before that was actually up here in the 48s, but without earnings coming out to the 25th and then their iPad mini announcement that I'm not too sure if everybody is going to get surprised about, volatility is rising pretty strong. So I would be weary of Apple. We could see a lot more whipsaws in Apple and a lot bigger moves. As you can see, it's been putting in a lot of 2% days, 1.5% days, which is a little bit uncharacteristic for it. But we are seeing that starting to happen, and I would expect a lot more whipsawing to happen, at least until we get their earnings report, maybe just the iPad mini announcement. Russell 2000 still breaking down here. We had talked about the failed breakout on Friday, failed breakout of this 847 level and the failed breakout of the 20-day moving average. I would assume that we are going to touch this 830 level, and we'll have to see if we can't hold that. VIX did get a bump today. As we were talking about in our last post about buying the VIX as protection, it did get a bump today, up 5%. I'd actually expect to see it up a little bit more going into the rest of this week if the market can't find a bid and can't put its feet behind it. So everyone needs to just stay cautious a little bit, just because we are coming down to some important levels. But like I said, we are in no man's land, so we're just going to have to take it one day at a time, and hopefully we just don't chop our way through this the entire time, because it's been very difficult to actually get on any real trades out there. All right, everyone, good luck into tomorrow.